Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Davis Michelson here with the Pro Farmer Podcast for September 15, 2025. With me again, Spencer Langford. Spencer, we had a little pop in the markets last week on Friday. We wound up with December corn futures 10.25 cents higher at 4.30. I like that. Over the course of the week, we actually gained somewhere in the neighborhood of about 12 cents here. Now, I know that the report had quite a bit to do with that. I'm going to talk with Lane Acreage about that in our upcoming segment, but I don't see any way to avoid you and I talking about the influence of that report when we talk about the way the markets ended up last week. I guess my question to you would be, we saw the rise in corn futures. We saw the rise in soybean futures as well. What else happened last week, if anything, in these markets that we watch so closely that maybe we're missing? Is there anything else, or was it all about position evening and then the report and then the impacts from that, or what we saw in the marketplace? Spencer?
Yeah, I think especially for corn, a pretty big part of that was positioning. Um, you saw, or you've seen pretty strong demand for corn still. Export sales have been relatively strong to finish out the marketing year and start this new one. So that's been a good sign for the commodity. And maybe there's been some undervaluing of corn. It traded very much lower after the August WASDE report. So I think since then we've kind of seen a slow grind up in the price there for the futures market. So corn seemed to almost maybe have this report factored in already before it had come out. It seemed like maybe the market had been anticipating this, and the report came in and they liked what they saw. So.
Can I ask you to speculate completely unfairly here? First thing in the morning, Spencer. Let's already look out to the October reports. We saw a reduction in the corn yield and just a slight cut to the projected soybean yield as well. We know there are some disease issues out there and some problems. Can you foresee a scenario in which end users, commercials, and maybe ethanol grinders and such are looking ahead to those October reports and expecting maybe another cut? Is it possible that we keep some of the strength here in the corn and soybeans and maybe, I don't know, maybe even move higher from here?
Yeah, I think that's definitely a possibility with the September report, especially for the U.S. data. We don't really have a great idea of what actually was out in the field yet still. USDA, they're not going to start actually taking a lot of samples and getting a lot of, kernel counts, things like that, from their objective yield lab until the October report. And that's when I think you'll see a lot more of the disease pressure, things like that, to be more evident. I think they like to tend to be more cautious, conservative until they get confirmation in the form of being able to actually physically sample those fields themselves. So I don't think a yield reduction is out of the question at all.
Okay, very good.
And hopefully no more acres get found as well. That would definitely be helpful.
That was mysterious, where they added, I don't even recall how many, 1.35, 1.3 million acres suddenly appeared on the corn balance sheet. At least on the harvested side there. Where did those acres come from? How did we miss those? That seems like a pretty big chunk.
Yeah, it's definitely a very unusual swing, especially for this time of year. I'm not privy to the internal goings on at USDA right now. I do remember back when the August report released, Lance Honig with NASS, he had mentioned that there were some issues getting that FSA acreage data to them in a timely manner. They weren't able to, I think there had been some questions floating around if that had come out on time.
Yeah, I'd forgotten about that. That's good. Talk to our wheat growers here just a little bit. On Friday, The D's hard red futures were up 4 3/4 at 5.14. Soft red wheat up 2 cents, and the spring wheat up just a quarter of a penny there. Anything to be noted about the wheat markets either last week or something you're looking forward to this week?
Yeah, gosh, wheat, it just kind of it's lagging behind like it likes to do here lately. I think the main thing, even though we've seen really strong exports for wheat through the first quarter of its marketing year, I think what's holding back the futures price is the worldwide supply. Um, you've got really, really strong reports coming out of the Black Sea region, which is a major exporter, and then also in the southern hemisphere. I've only seen positive reports coming out of Argentina and Australia. They seem to think that they've got a pretty good amount of moisture, that they'll have a good stand of wheat when it comes time. So I think that supply is going to continue to weigh. And technically, I mean, we haven't really been able to get much traction for wheat. It's hard when you're fighting off contract lows every week. You're testing your price support and not even really bringing resistance at that upper level into the conversation. So psychologically, I think people just remain very bearish on wheat.
Yeah, yeah. Let's wrap up our conversation on the grains and the soybeans. Anything coming up this coming week that you're expecting might give us something interesting to talk about in the markets on the corn, soybeans, and wheat at all?
Yeah, obviously crop progress, just being able to see how's harvest progressing. That's always something that's on my radar. And then also, with the Federal Reserve meeting coming up, their decisions, their monetary policy that can impact the value of the dollar, which can in turn have a major impact on our exports and our price competitiveness across the world. We were just talking about wheat. Currently, wheat prices are extremely competitive compared to different ports around the globe. So we may see which direction they decide to go. Inflation and unemployment are both up. So we'll see which direction they want to go.
That's good. I'm glad you brought up those sort of outside economic factors that can be that can have such an impact on the grain trade. Now, let's talk about cattle. The October fat cattle were lower, $2.30 at 229.97 and a half. Even the feeders down 6.55. We saw some limit down perform. Well, we saw a limit down performance not so long ago, but the feeders at the lowest level since August 14. And even the hogs decided to join along on the downside slide there last week by the end of the week. So is it over for cattle? Is it too soon to tell? And if it is, can the hogs hang on their own merits, Spencer?
Yeah, with cattle, I think a lot of the concerns are tied to those outside economic data that I was mentioning. The economy seems to be cooling a little bit. I don't think anyone wants to call it a recession, but we've seen pretty major downward revisions to the employment numbers. Inflation continues to tick up, food included in that as a category, and I think it just kind of worries people a little bit about the strength of the American consumer, whether or not they're going to be able to keep up with this. One thing that might be a little bit of a saving grace would be what we see in the cattle on feed report that comes out this Friday. Typically, cash trade is a little bit lighter in weeks where you have that cattle on feed report. Just not a ton of movement. People don't want to take a big swing and risk missing out on, predicting the wrong way. So I don't think you'll see a ton of movement this week in the cattle market. And as far as hogs go, I think, pork being a substitute good to beef, it kind of depends on the why of what if the cattle market is moving down. If people think the cattle market's moving down because consumers are seeking cheaper protein alternatives, I think that bodes very well for hogs. So that's one scenario that we could see play out.
That's an excellent, excellent thought. Spencer, I'm going to cut you loose there. I know you've got a lot to do over there at Pro Farmer. I appreciate your perspective on this terrific conversation this morning. Everybody, that's Spencer Langford from Pro Farmer. Stick around right through this break. We'll be back with Lane Acreage to talk about that report. Hey everyone, Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to ProFarmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more. All right, welcome back to the Pro Farmer Podcast. Davis Michelson here. I'm bringing in now Lane Acreage from Pro Farmer. Lane, I know that you were looking at the reports very carefully. We just spoke with Spencer. We hit some of the high points. I'd like to just sort of pick your brain on what stuck out to you in the reports from Friday. They moved the markets. Sustainability. Can we stay here is a question. I know that out on Crop Tour, you had observed some disease and you had some pretty strong feelings about it. Some acres magically appeared, pod weights, ear counts. I don't know where you want to go with this, Lane, but bring us up to speed. What do you want us to know that you picked out of these reports here, buddy?
Yeah, pulled up that crop production report at 11 o'clock. And, we were kind of talking about the possibility of a yield increase in this report. And the first line that I read was USDA increased production 1%, and just laughed. And, scrolled down, looked at more of the report, and it's like, oh, they did cut yield. We found another million plus acres. Just unbelievable. Really begs a question, what's going on in some of these acreage surveys, and just a lack of response, maybe some late acreage decisions. But guys really went all in on corn this year. And we did say an increase in soybean acres a bit as well, but it wasn't necessarily as significant. Soybean is certainly more of a supply story than corn is. It's going to be a demand story. 98 million acres, even if we get a pretty good haircut on yield, we're still going to need a lot of demand to take off a lot of this crop. But there is also some supply concern. So yes, we have 90 million acres of corn. We're still anticipating a record yield by over 7 bushels to the acre. That's a significant amount. And USDA does not take into account ear weights in this September report, but we can backdoor into those numbers and figure out what are they assuming. So we had record ear weights last year, and this year it's an anticipated record again, beating last year's record by 4.1%. That's a pretty big margin. Last year we topped the record by about 4.7%, topping it by another 4.1% this year. That's pretty optimistic, especially with all the disease that we've been talking about. Last week in the newsletter, we put in producer crop comments. We've been getting some harvest reports, and none of it's incredibly bullish on yields. We're talking about 10 bushels below last year, 20 bushels below last year, in some cases 40 bushels below last year. Disease really took the top end off this crop. And if we're going to be breaking last year's record by over 7 bushels to the acre, we're going to need a really good crop in these high production areas that aren't yielding that well so far. Now, sure, we could be saying the worst of the worst reports. Yes, that could be true, but also we need consistency if we're going to be having record yields, and that's not what we're seeing so far. On the soybean side of things, we didn't see much of a change in yield, but still anticipating record yields. And the pod weight story is a little different. USDA is actually anticipating the lowest pod weight since 2012. And well, how can they be anticipating a record yield? Well, there is a lot of pods out there. USDA's objective yield study found what we found on Crop Tour. There's a lot of pods out there, and still, I think them anticipating lower pod weights that could be partially due to the dry weather that we saw in August. But even with the huge number of pods out there, I think anticipating a record is pretty optimistic at this point. Really detrimental late season weather. Noted a lot of disease in the West too. We'll see where they end up. But lowest pod weight since 2012. I mean, that's a story in itself.
Mm-hmm. And here's the thing. On Crop Tour, you're talking about disease. You found a lot of disease out there. I guess I'm not enough of a plant pathologist to understand climatologically what's happened between now and then and what impact that might have. But I know that if I've got a broken arm and I don't go to the doctor, it's not going to fix itself. Do you have a sense for how much has been done, some late fungicide applications maybe, or, farmers doing whatever it is that they need to do since maybe the beginning of August, let's call it, to combat some of this disease. Do you have a sense for how pervasive that is out there, that farmers have done something that might kind of stem the impact of that yield cut that you were talking about?
Some guys for sure. And we've been seeing some A/B studies, guys that are doing test plots. Is this fungicide pass really going to pay? So they maybe did half a field, or they did one sweep and then left a sweep and then one sweep back. And it's obvious. That's a 30 to 50 bushel difference between where it was treated and where it wasn't. So that's going to boost yields in some parts, but I mean, I don't think that's going to be the case overall and in general. And still that disease is going to be weighing on the crop with or without that fungicide pass, just due to how much is out there.
It sounds like the Council of Experts would agree in the background there. I've got my counsel right here asleep at my feet. So moving forward here, harvest time, I don't even know if we have enough information to say, you know what, maybe we're going to buck the trend this year. Maybe we get some strength heading into harvest here. What is your sense on corn and soybeans? It's not quite time for combines to roll in the gut slot of the corn belt. However, some harvest reports, as you said, are coming in here. Do you have a sense for how prices might treat us as harvest progresses?
Yeah, in August, USDA printed that 188.8. And yes, we made a new spike contract low in December corn futures, but we rebounded pretty strongly right after that. And yield came in right about where it was expected in this report from the pre-report expectations. But with the acreage increase, production was higher than expectations. And prices rallying really strongly in the face of that, I think, is a testament to the market doesn't really think that's accurate still. I think the market's continuing to price in a lower yield. It doesn't quite yet know what that impact is. But with prices trending higher as harvest is starting, it's pretty rare, but it does feel like we put in an early harvest low. And part of that's got to be just a testament to how robust demand has been. Demand was really strong to finish the old crop marketing year, and it's finished the new crop marketing year just as strong. We've got export sales, the highest in years to start the marketing year, highest that we have on record. And that just topped the 2021 record when China was actually purchasing U.S. corn. Now, historically, they don't purchase a lot of U.S. corn, but they were to fulfill some obligations in that phase one trade agreement. So we even passed that, which was a skewed higher number. It should never have been that high, but it was because China was purchasing a lot of U.S. grain. So a testament to just how strong demand is. And I think that's really what's been lifting corn prices here in the past few weeks to a month.
Yeah. A question out of left field that just sort of occurred to me, because I know there's been an awful lot of talk about farmers currently operating below the cost of production, given futures prices, and even, soybean basis in particular in the Dakotas, I'm thinking of is causing some consternation. And yet we tend to be fans of selling into rallies. Does selling into rallies apply even below the cost of production, or do we need to wait here until we hit some magic number on our balance sheets, Lane?
Well, it varies quite a bit operation to operation. So like knowing your break evens is really important. And it's also taking advantage of the opportunities that the market provides. So if we're going to be losing money on the 2025 crop, it's like losing as little money as possible. And that's a terrible way to think, but it's kind of the reality that we're faced with. Yeah. We're trying to exercise as much patience as we can right now, but also understanding that this corn balance sheet is kind of untenable. It's going to be really difficult to have prices rally up to $5 when we've got a 2 billion bushel carryout almost any way you cut it. We're anticipating record demand, even on our balance sheets with the lower production number. I mean, we're still at 1.9 billion bushels. So it's just a really difficult situation to manage, but we're trying to kind of let the market play out, let this rally go, and have some tight stops under the market if prices do end up turning lower. But on the soybean side of things, I think there's a lot of opportunity and potential. We've got Trump commenting this morning that trade talks are going well. Now we'll see what becomes of that, but one of the key things that he posted about on True Social this morning was he's going to have a phone call with Xi. Now, that's a big deal. They haven't talked throughout his presidency, and that's something that the market's really been looking forward to. And we saw a little bit of buying in soybeans this morning. And the soybean balance sheet is tight. If China purchases what they historically purchase, we don't need to export much to anybody else to hit where USDA is at. And we're going to have to ration demand at some point, and that's going to be with price. So still think soybeans are pretty underpriced, and that provides a lot of opportunity for a rally. And, soybeans were to put together a pretty good rally. What does that mean for 2026 corn acres? Well, corn acres aren't going to be 98 million acres. And, that could provide a little bit of lift on the corn side of things as well. So these things, they got to work hand in hand, but it feels like there's a world out there in which we can continue to push higher, but we do eventually want to reward those rallies when it feels like it makes the most sense.
Lane, I'm sure glad that we've got your brain to lean into during times like this. Your insights are always super helpful and always give us a lot to think about. Patience sounds like it's going to be key. Thanks for tuning into the Pro Farmer Podcast, everybody. For Spencer Langford and for Lane Acreage, it's Davis Michelson.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on profarmer.com and in this Friday's Pro Farmer newsletter.